Hello guys, welcome back to our YouTube channel. So guys, today I have another bang for you guys. And today we will be taking a look at our incorrect net profit before tax. We will be taking a look at our incorrect net profit before tax. So guys, normally I call this incorrect net profit before tax, I call it my zana, meaning it's a mini income statement with few errors or with some omissions behind it. So guys, we have our structure of our incorrect net profit before tax. As you can see that they gave us the amount for our net profit before tax. So guys, before we can start with this wonderful lesson of us, guys, we need to understand only few things. So guys, in order for us to understand, we need to have reasons. Why is it necessary for us to complete our incorrect net profit before tax? It's because of only few reasons. It's because of auditors, they forgot to record. But what did they forget to record? They forgot to record the following things. It's either they forgot all the information. Whenever we speak about all the information, we are talking about what? About the account plus its adjustments. So these are the possible reasons why we need to complete our net profit before tax. It's because of what? They forgot to record all the information, meaning what? The account plus the adjustment of that account. For example, whenever I talk about account and adjustment, I talk about they have completely forgot to record, maybe for example, rent income, the amount from the trial balance, as well as the adjustment for it. Maybe again, for example, they forgot to record salaries and wages, the amount from the trial balance, as well as the adjustment for salaries and wages. And then again, another reason for that, it might be because of they forgot the adjustments. So it happens that our auditors, they were able to record the account, but they forgot to record adjustment. So guys, this information will help us in order to understand what are we dealing with. So for example, let's take a look at our activity. It says it's Westville Ltd. And then the following information relates to Westville Ltd. The financial year ended 28 February 2019. So guys, all the time we need to have our timeline. So basically this will be our timeline. And then our financial year ended when? February 2019, meaning it started when? 2019, meaning it started when? It started the following month, which is March. So our financial year started March 2018, and then it's March, April, May, June, July, August, September, October, November, December, January, and then February. So it's 12 months period. And then guys, let's see what's happening in this information. Okay, right? And then it says required 3.2, calculate the correct net profit after tax for the financial year ended 28 February 2019. And then we have our timeline. Information number A. The following items appear in the pre-adjustment trial balance on the 28th February 2019. So they gave us our trial balance, whereby we have ordinary share capital, retained income, loan, fixed asset, fixed deposit, sales, creditors control, debtors control, provision for bad debts, trading stock, consumable stores on hand, such as packing materials, and then bank overdraft, as well as petty cash. And then information number B, it says on the 4th of December 2018, the directors approved the repurchase of 20,000 shares at 9 rand each. This transaction was probably recorded. So guys, in under income statement, we need to understand each and every single transaction. So under income statement, guys, we are not interested when it comes to shares. So this transaction for us, it's null. It's declared as null because of we are not going to record any shares under our income statement. So this one, it's not part of our income statement. And then information C, the net profit before tax was incorrectly recorded as 11,449. So they have provided us with the what? With the net profit before tax. So as how much? 1,449,200. And then under our answer sheet, it has already been what? Been provided and recorded. So thank you. And then we are going to continue with our transaction. So I just want to show you something, the reasons why we have to complete this mini sketch of ours, which is mini income statement, the incorrect net profit before tax. And then information C says the following information. So the following information was not taken into what? Into account. So whenever we talk about the information now, we are talking about all the information, meaning it's what is the account plus adjustment. So now it's because of they gave us, it's what is the information. The information was forgotten, meaning it was what? It was not taken into what? Into account. The information was not taken into what? Into account. So guys, before now we can get into these transactions, so now I need to show you something in which it will benefit you whenever you are completing your what? Your incorrect net profit before tax. So what we are going to deal with now, we know that all the information was forgotten, which is the account as well as the what? The adjustments for those for what? For all the relevant information. And then now I want to show you something. So guys, let's get to the point. So guys, in order for you to be perfect and be able to record our incorrect net profit before tax, all the given information, you need to at least to have a structure aside. This will be what? Your structure aside. And then you need to ask yourself. So normally this thing, normally I call it what we call thinking level. Thinking what? Level, meaning now we need to embrace our skills. We need to what? To show that we can think in a way that is very broad, meaning thinking out of the box. So guys, in this side we are going to have what? Incomes. So we need to know that are we making incomes in the business, or are we making what we call expenses? As we know that income statement, it's all about incomes as well as what? Expenses. And then whenever we have incomes, then we are gaining. We are what? Gaining in the business, meaning we are gaining, we are making money, meaning money is coming in the what? In the business. While expenses, it will be what? It will be losses. We are making losses in the what? In the business. And then all the incomes will be shown by a positive sign, while expenses will be shown by a negative sign. And then as well as incomes will be again shown by just an amount, a normal amount, while expenses will be indicated by what? By brackets. So this is basically what we need to know. This is our mini structure that we need to know. And then all the transactions, they will tell us if ever it's an income or it's an expense, so that we can be able to record in our what? In our mini income statement. Thank you. And then let's go to our first transaction. The director's fees of 625,000 was paid to 2 directors, meaning this information was what was forgotten at all. So we are going to write what? Our director's fees. Then we'll go to our income statement and then we'll say what? Director's fees. And then the opening amount, meaning is the what? Is the account. This amount is the account. So it's how much? It's 62500. So now we need to do what? We need to have a transaction now. Meaning now we need to have a transaction. As I told you at the beginning of the video, that reasons that we end up completing the incorrect net profit before tax is because of all the information was forgotten. Meaning they forgot the account from our trial balance as well as plus its adjustments. So now let's continue. So guys, the director's fees of 625,000 was paid to 2 directors. So normally guys, I like recording all the information down. So 625,000 was paid, but was paid to who? Was paid to 2 directors. Okay, let's continue. One of the 2 directors requested his fees for March 2019 be paid in February 2019 due to financial problems. So what happened basically is that one of the 2 directors have requested that we have to pay him in advance, meaning we had to pay him for another month. We had to pay this certain director 1 month in advance. We had to pay for what? For March. And anything under income statement, as guys, if you can go back to my previous videos, I said that anything that is not payable or has not yet been paid within our 12 months period, then it will be indicated by a positive sign, while anything that has been paid or received after our financial period, then it must be indicated by a negative sign. And then all those things will be prepaid expenses as also what? Income received in advance. And then anything that has not yet been received within 12 months period, which is still outstanding, it will be accrued income, as well as anything that we did not pay within 12 months period, it will be accrued expense. So these are basically the signs that we have. So now, as one of the directors has requested the money in advance, so now we have paid in this amount because of we paid when February 2019. So it shows that the sign that we are going to use here is a negative sign, though. So we need to go to that account and then illustrate by saying minus, meaning there must be a director's fee for 1 month that needs to be what? Needs to be subtracted in this account. And then let's continue and find out how much is that. And then 2 directors. Let's continue with our direction. All 2 directors receive the same monthly salary. So guys, it says that if ever one director receives 500, meaning another director receives 500. So normally these 2 directors are earning the same salary on the monthly basis. So let's find out how much is that. So guys, as in accounting, we use we stick within 12 months period. So the first director will have 12 months, and then another director will have what you call 13 months. Why? Because of he requested his salary for March to be paid when? During February. So this director is going to he got for 13 months, while one of the directors got for how much? For 12 months. So now guys, let's calculate in total how many months in total do we have. So it's going to be 12 months of the first director plus 13 months of another director. So all the months that we have now, it's how many months? 25 months. So guys, now we can be able to to find out each and every month each director is earning how much. And then we are going to say our 625 divided by 25 months. And then how much is that? Then it's 625,000 divided by 25 months. So each and every director is earning how much? 25,000. So now we know that each and every director is earning 25,000. And then while one of the director requested his salary to for March must be paid during when? February 2019. So we have paid extra 25,000. So anything that has been paid in advance must come back to us. So we have to subtract that 25,000. So this thing, it's an account that was forgotten, as well as the what? Its adjustment. And then we can record our final answer. So now we are going to say 625,000 subtract 25,000, and then the amount that we were supposed to pay for only 12 months period, it was 600,000. So now guys, we need to ask ourselves, this 600,000 as a business, are we gaining it? Is it coming in the business or going out of the business? Meaning, what I mean is that this 600,000, is it an income in the business or is it an expense? So guys, in 600,000, it's an expense because of the money needs to go out of the business. So we are going to record it under what? Under expenses. 600 what? 600,000. It's an expense because of the money it's going out of the business to pay directors what? Directors fees. So these are the signs that we are going to include in our what? In our incorrect net profit before tax. So we know this 600,000, it's an expense, so it must be shown under what? Under brackets. So guys, and please, it's very important to have this thinking skill or thinking level whenever you do this incorrect net profit before tax. Just have a mini table aside and then make sure that you think out of the box. So directors fees in our what you call income statement, they are recorded as what? As operating expenses. So this is an expense, so it's going to affect us in a negative way in the business. Thank you so much. So let's take a second transaction. So guys, in our second transaction, it says 80% of the packing materials were used during the financial year. 80% of the packing material were used during the financial year. So guys, in my previous videos, guys, I spoke a lot about packing material a lot. So guys, basically what we need in our income statement is the amount of packing materials that have been used. So whenever we use packing material, then it will become what? An expense. But if ever we did not use any packing material during the year, then we call that what? Income. We call it consumable stores on hand. So it will be basically converted into assets. But whenever we start using our packing material during the year, so they become what? Expenses. And then guys, we have our packing material. So let's go to our answer sheet and then we record. So we are going to say transaction number 2, it's going to be what? Packing materials. And then under packing materials, guys, and let's go to our trial balance. Under our trial balance, we have consumable stores on hand, which is packing material. Consumable stores on hand, it's very important. It's not the opening balance of packing material, but it's balanced at the what? It's balanced at the end. For packing material, what are we left with in the business as packing material? So we are left with 12,000, meaning that whatever that we had 100% in the business, and then we used 80% of our 100% of packing materials, and then we are left with what? With 20%. So on hand, it's equals to how many percent? 20%. And then now, in order for us to be able to calculate packing materials that have been used, because of now they are regarded as assets, we are going to say our 12,000 multiply by what we are looking for. We are looking for how much? We are only looking for 80% over what we have, over 20%, because of this 12,000 is packing material on hand. What is left in the business? So over what? Over 20%. And then how much are we going to get for packing materials? So packing materials that have been used in the business are how much? 48,000. We used 48,000. So guys, normally whenever we come across this transaction, most of the time they will tell you that following items were on hand. trading stock on hand is this much, and then we are going to take an opening balance of trading stock, subtract trading stock on hand, and then you'll be able to see if ever you made a trading stock deficit or a surplus, and then followed by packing materials on hand, whereby you are going to take your opening balance for packing materials, subtract packing materials on hand, and then you are going to get the packing materials used during the year. So in this transaction, they already told us the percentage of packing materials that were used at the end of the year, and then they gave us packing materials on hand. So packing materials on hand is 12,000 multiplied by 80 divided by 20%, and then this is the amount that we got. So now guys, we are taking it to our thinking level. 48,000. So now we need to know that 48,000, is it an income or is it an expense in our business? So guys, in packing materials, because of they are used, so it's an expense. So is the business gaining or is the business losing? The business is losing. How much are we losing? We are losing how much? 48,000. So now we know that 48,000 is an expense, and it must be shown by either a negative sign or in brackets. And then now we record that 48,000 in what? In brackets. Guys, I hope that you understand. Make sure if ever you don't understand, rewind the video and make sure that you understand. And you are allowed to send comments if ever you need help, and then I will attend to those comments. So guys, let's go to our transaction number 3. Transaction number 3, it says a debtor B Zulu. Guys, whenever you get across this transaction, you must think. So whenever we talk about a debtor, it's either we talk about bad debts or bad debts recovered. So let's find out what is happening about this debt. A debtor B Zulu who owes 1,200. This typical of debtor owes 1,200 in the business, meaning this debtor is owing us how much? 100% in the business. This debtor owes us how much? 100%. Has been declared insolvent, meaning this guy, because of he has been declared insolvent, then is a bad debt. It's a a bad debt. He is a bad debt. He is a bad debt. And then his estate paid only 480. So out of 100%, out of 1,200 that he owes us, he only paid us only 480. And then this amount was received and not recorded. Right off the balance. So the balance that must be written off, the balance that he still owes us in the business, is how much? So out of the 100% that he owes us of how much? 1,200, he only paid 480, meaning he still owes us how much? 720. And this 720 must be written off as what? As a bad debt. So this guy, he's a He's a bad debt. So guys, this information needs to be needs to be recorded. And then we are going to go to our mini income statement and write transaction number 3. It's a bad debt. It's a bad debt. And then this guy owes us 1,200 and he only paid us 480 rand, and then the remaining is 720 rand. So now we need to go to our thinking level of skill, and then now we have to go. So our thinking level, now we need to know a bad debt. What is a bad debt? Is it an income or an expense? Meaning a bad debt, guys, that guy he can no longer be able to pay us in the business, so he decided to run away. That's why we declare this guy as what? As insolvent. So we need to write off his amount. So he's a bad debt, meaning all bad debts must be what? Must be expenses, because of at the end of the day, bad debts are recorded under what? Other operating expenses. So this guy is a bad debt, and we are not gaining anything, but we are going to lose our 720, and then our 720 is recorded under what? Expenses. So it's either it's going to be a negative 720 or in bracket. And then now we can go to our mini income statement and put brackets and then 720 inside what? Inside brackets. So guys, in all this information here, the first transaction, they forgot the account plus the adjustment, and then the following information, they gave us the what? The adjustment, and then they forgot to record the adjustment, and then the same thing, information transaction number 3, they also forgot to record the what? The adjustment. So guys, it's very important to understand if ever they were able to record the account and the adjustment, or they only forgot to record the what? The adjustment. So let's go to our fourth transaction. So guys, our fourth transaction is as follows: rent income. So now we know that our fourth transaction is all about rent income. So let's find out if ever they forgot all the information or they only forgot the adjustment. So let's find out. Rent income of 177,600 was received for 14 months. The rent was increased on the 1st September by 10%. So guys, in this transaction, they forgot everything. All the information was forgotten. So now we'll go to our what? We'll go to our answer sheet and write transaction number 4. Then it's a rent income. As what? Rent income. And then the opening amount from the trial balance, it's how much? 177,600. And then it will be followed by what? By the transaction. So guys, now let's find out and look what happened. So rent income of 177,600 was received for 14 months. And in accounting, guys, we only stick within 12 months period. We only stick within what? 12 months period. Anything beyond our financial year, anything beyond our 12 months period, it must be illustrated by a negative sign. Then now we can go to our what? To our transaction, and then show what? Show the negative sign. That under rent income we need to subtract 2 months rent that has been received in what? In advance. We need to subtract it because of this is the money that we got for rent, but we got it for 14 months. So how are we going to be able to calculate that amount of money? So guys, now we are going to start. So basically, when it comes to this transaction, I will love to solve for X. So this transaction will be very good for those learners who are doing pure maths, and then for those learners who are doing maths lit, then this is the opportunity to learn another different method. And then whenever, if ever you have another different method to calculate rent income, I will be very happy to see your comment. Maybe you can write your method underneath there, and then I will be able to come back to it and check. So, but let's continue with what we have right now. So basically now this is our this is our timeline. We are going to need our timeline. So the rent was increased on the 1st September, meaning we paid rent from March, and then when it comes to 1st September, the rent was increased by 10%. So 1st September rent was increased by how much? 10%. Meaning before September we were paying 100%, and then after September we were paying 110% because of there was an increase of 10%. So now we are going to calculate the amount before, the amount that we have been receiving before increase. So we are going to look forward for before increase. How are we going to do that? So how many months before increase? It's 1, 2, 3, 4, 5, 6 months before what? Before increase, because of the increase was when 1st September. So it's very important when it comes to date, guys. Before increase it was 1st September. So before 1st September we were paying 100% for how many months? 1, 2, 3, 4, 5, 6. So it's 6x multiply by 100% over 100%, and then put it inside brackets. This is what? Before increase. And then plus after increase. After increase is how many months? From starting the 1st of September we were paying 100% plus 100% plus 10% extra. So it's how many months? 1, 2, 3, 4, 5, 6, 7 plus another month, which is April. So it's 14 months in all. It's 14 months. So after increase it's how many months? 1, 2, 3, 4, 5, 6, 7, 8. So we are going to have 8 months before after increase, which is 110% over 100%, and then equals to which amount? The amount that we already have, so that we can be able to see how much we were receiving before increase, and then equals to 177,600. And then now bought mass brackets first, meaning we need to start solving these brackets first. So 6x multiplied by 100 divided by 100 equals to what? Equals to 6x. And then plus 8x multiplied by 110 divided by 100 equals to how much? Equals to 8.8x. 8.8x equals to what? This amount. And then equals to 177,600. And then guys, we need to gather all the like terms. 6x plus 8.8x are the like terms. So 6x plus 8.8x, we have how much? We have 14.8x equals to 177,600. And then now guys, we need to be left with our x. We are solving for x, meaning we are solving for this month, how much we were getting each and every month before increase, and then divide by 14.8, so that 14.8 can cancel 14.8, so that we can be left with what? With our x. And then what you did on your left must be made on your right, divided by 14.8. And then how much is our x? How much were we receiving before an increase? So 177,600 divided by 14.8x. And then each and every month we were getting 12,000 for rent before increase. This amount is for what? It's before increase. We were getting this amount before increase, meaning that starting from March up, it's March, April, May, June, July, August, till August, we were getting 12,000. Meaning after August, we were paying our 12,000 plus 10% extra. So how much we were paying? Then it's 12,000 multiplied by 110 over 100, and then we were receiving how much? Then it's 12,000 multiplied by 110 divided by 100. Then we were receiving 13,200 for rent. So guys, starting from this September till the last month, which is April, we were receiving 13,200 from our tenants. and they paid 2 months in advance, meaning now multiply by 2 months that we are not interested with. So 13,200 multiplied by 2 months, it's 26,400. And then now we are going to have to subtract 26,400. And then how much do we have then? 177,600 subtract 26,400, then the amount that we need to have at the end of the financial year, it's 151,200 as our incomes. And then now, guys, we need to go and do our thinking level. So 151,200, is it an income or an expense to us? So guys, basically this thing is a rent income, meaning there's an income there, meaning rent income is the money that coming in the business, meaning we are gaining that amount of money. As when it comes to income statement, we record it under operating incomes. So 151,200, it's our what? It's our incomes, and it must be shown by what sign? A positive sign. And then so now there's no need for us to put bracket because of this are regarded as our what? As our incomes. I hope, guys, you understand, and make sure that you go back, you rewind so that you can see how did I calculate my rent income. So we are going to start calculating the amount that we were getting before increase. Immediately after having your amount before increase, then you can multiply by 100 plus the what? By the percentage of the increment, so which is 110 divided by 100%. So after increase we were getting 13,200. Now because of 2 months was received in advance, then multiply by 2. That's how we got 26,400. And then from the amount that we have for rent income, subtract 2 months income received in advance, then this is the amount that we were supposed to have within 12 months period. So guys, let's go to our fifth transaction. So guys, let's go to our fifth transaction. Let's find out what is happening. An interim dividend of 55,820 was paid on the 1st September 2018. Guys, was paid 1st September 2018, but was debited incorrectly to the salaries account. So guys, normally when it comes to income statement, we don't record interim dividends. But there was an error here. So we need to fix the error. There was an error in this transaction whereby they took the interim dividends of 55,820 and incorrectly debited them to our salaries account. This 55,820 was not for salaries, but it was for interims. So that editor took this amount of money and recorded it as what? As salaries. So basically what happened is that this is the salaries account, T-ledger for salary. Salary is an expense. All expenses are increasing on the debit side and decrease under what? The credit side. So this guy, based on the information it says, but was debited incorrectly to salaries account, meaning this guy went and recorded 55,820 under salary. So this is what happened. And now we need to correct the error. It was not supposed to be there. So now we have to cancel this 55,820 under salaries. So how are we going to cancel it? Then we go to the credit side, 55,820. So at the end, positive 55,820 as we record it under the credit side, minus 55,820. At the end, our salaries will be left with 0. So guys, let's go and record our information. So this is information number 5. This is our information number 5, and then we are going to write salaries. So under salaries we had 55,820. It was recorded like this. So now we need to to do what? We need to cancel this amount of money. So basically, this thing, it has already been recorded. This thing has already been what? Recorded. So now we need to do what? We have to just go to that site and then subtract it, meaning they have added our expenses. So we're just going to come, and then we know that it's under the credit side and we need to cancel it. So basically, when it comes to our thinking level, I need you to be calm and be able to what? To understand this transaction. So guys, what happened in this transaction? This guy came to our salaries, and then this guy recorded 55,800 as an expense, and he was not supposed to do this. So in order to cancel this expense, we need to go and add it under what? Under incomes as 55,820. So basically, incomes will cancel what? Expenses, and be left with 0 at the end. So basically, 55,820 will be recorded like this, and then it's going to be illustrated as what? As income. Because of the error, it was recorded as an expense, and we did not have any salaries that we had to pay during that financial year. So how are we going to scratch this? Then we have to just go to the incomes, 55,820, and then this, subtract this, we are left with 0. So now the only thing that we did, we took our 55,820 and recorded it under incomes, and then this is how we have recorded it. So smooth and simple. And then this one becomes a null, because of now we have recorded it under what? As incomes. So our incomes will cancel that negative, and then at the end we are left with 0 under salaries. That's it. And then guys, let's go to this next transaction. A debtor with a credit balance of 1,000 on the 28th February 2019 must be transferred to creditors ledger. This one, guys, will go to bank. This one will go to what? To the balance sheet. So it's not part of income statement. So we move. So guys, it's very important to understand your transaction. Under income statement, we don't record debtors as well as creditors. So it will go to what? To balance sheet. And then followed by another transaction, transaction number 7. The loan statement from KZN Bank reflects the following: opening balance, repayments during the year, interest capitalized. So we are only going to what? To take the interest, because of it's what? It's interest expense. And then under income statement, we have interest what? Expense. So our interest expense, it's as given as what? It has already been given. So our interest expense has already been given as how much? As 1,500. So our interest expense has already been given as 1,500,700. So guys, in interest expense, let's take it to our thinking level. Interest expense, the money is going out of the business. Are we gaining or are we losing? We are losing interest expense. How much? 1,500,500. And then meaning it's what? It's under expenses. So now we need to put our interest expense under what? Under brackets. That's it. Simple and straightforward. Let's go to another transaction. And then transaction number 8. Outstanding check on the bank statement reflects on, guys, in bank reconciliation. This one is not part of income statement, so it will go to bank reconciliations. And then following transaction number 9. Income tax amounts to 225,000 and equal to 30% of the net profit before tax. So guys, in income tax amounts to 225 and it's equals to 30% of the net profit before tax. So already they gave us what? Income tax amount, which is how much? 255. And then we have our income tax under our answer sheet. So we are just going to record that 255,000 because of it's already been given to us. And then guys, in thinking level, income tax, it's an expense to us. It has to be paid to SARS. So we are not gaining the money, but we have to lose the money. So we are going to lose what? 25500. So it needs to be what? Shown in brackets. And then guys, in last transaction, a final dividend of 75 cents per share was declared on 28 February 2019. Under income statement, we don't do dividends. So this one will go to what? To balance sheet. That's it. And then guys, we managed to record all the information that have been provided to us. So now we can be able to do what? Calculate our net profit after tax. So now let's start. 1,449,200 subtract 600,000 subtract 48,000 subtract 720 plus 151,200 as our rent income plus the error that happened in our salaries, and then equals to 1,007,500. And then it's what? Operating profit before interest expense. And then we need to subtract our income, our what? Interest expense. So 1 million subtract 157,500 equals to 850,000, and then 850,000, which is our net profit before tax, subtract our income tax of how much? 255,000, then equals to our net profit after tax, which is how much? 595,000. So basically guys, that's how we calculate. And then guys, and there's something interesting that I saw in our transactions here, income tax. So they said that income tax of 25500 was calculated as the 30% of our net profit before tax. So guys, it was calculated as our net profit before tax. Our net profit before tax is declared as how much? Net profit before tax is equals to 100%, which is which amount? This amount. Net profit before tax, it's 850. So if ever we have been doing everything in a good way, we need to confirm that everything is correct. It's just something that I have just saw right now. So we can say that what we have the income tax of 255,000 multiplied by 100%, meaning we are looking forward for our net profit before tax, which is how much? 850 here in our answer sheet. So now we are trying to prove ourselves that we are correct. I want to see something here, guys. And then divided by what we have. So this 255,000, it's equals to 30%. And then divided by 30%. And then how much is our net profit before tax? How much is our 100%? Let's see. 255 000 multiply by 100 divided by 30, then equals to 850,000. So we have proved that this 850,000 is correct. Then this is how, guys, you do your mini income statement. So guys, if ever you did not understand, you have a right to rewind. You have a right to comment in this YouTube channel, and I will be very excited, guys, to learn new things from you too, guys. So guys, stay tuned, and I will keep on uploading many banks as possible. So guys, make sure that you subscribe, you like, you view, and you also share these videos to other students out there. So guys, this is the bank. Bang.